0.6% gain on the S&P 500, but a 1.6% gain, Carol Massar, on the Russell 2000. Outperformance by the small caps. Don't poo-poo it.
No, I'm not poo-pooing. It's your favorite index. I know you love those little critters. Having said that, I'm looking at the semiconductor names because if you want to see some outperformance, check it out. The stocks, most of the names are higher today, and you're looking at the index up about 3%, almost 3%.
You know, I'm having trouble kind of making sense of the Look, the stock market is not the economy. We know that. The exuberance that we're seeing.
I disagree, but go ahead.
Excuse me?
I disagree, but go ahead.
You disagree? Okay.
Yeah, I do, strongly.
Okay, we don't have time to talk about that right now. We can talk about that maybe after the bells. But comments from the CEO of Dollar General earlier today about a weakening consumer, wealthier consumers trading down. That's why we're seeing shares of Dollar General higher today. How are we making sense of the sort of conflicting signals that we're getting about the health of the consumer and the U.S. economy?
It's interesting, right? I mean, we've had this conversation with Anthony Chukumba earlier that if you were looking for reasons to get worried about the economy, the fact that you do have the CEO saying that higher income consumers are coming to Dollar General, you could build a case to get a little bit bearish about the state of where we stand right now, Romaine. All
right. Well, I'm going to focus on one of the positives. That is the outperformance that we're seeing in the small caps. And that is because of some of those names like those dollar stores. Signet Jewelers up about 13%, leading the charge in the Russell 2000. Fluor, Bloom Energy, Garden, and Credo also in the mix as well. So you're getting a bit of a broadening, at least for one day. And of course, you know, as a hat tip to Carol Massar, we've been here before, and we know this can reverse in a big way over time. Before we get to the closing bells, just a quick note here. Crossing the wire right now, a big headline on Wells Fargo. The Federal Reserve here in the United States has finally lifted the asset cap restriction on Wells Fargo. This, of course, has been in place for years, and we're seeing a big pop in the shares in the after hours, up by about 6%. We're going to get you some more details on that in just a second, but let's walk you through the broad market numbers with the Dow Jones Industrial Average up by 0.5 percentage point, the S&P up by 0.6 percentage point, the NASDAQ up by 0.8 percentage point, and the Russell 2000 up 1.6%.
Hey, I'm just going to piggyback on that. That cap on Wells Fargo has been in place for more than 7 years. We know that it went through a really tricky time with a lot of issues and a lot of different problems that caused that cap to be there. But now you've got, the removal of that cap allowing the bank essentially to pursue growth again, closing the door on nearly a decade of scandals, and marks a major, major win for the company's CEO, Charlie Scharf. And as Romaine said, we're seeing it pop certainly in the aftermarket.
And I just real quick, I just want to stay on this for just one second. So the statement from Michael Barr, of course, the Fed governor who kind of oversees all of the banking supervision, saying that the removal of that asset cap does represent, quote, successful remediation to the required standard based on focused management leadership, strong board oversight, and strict supervision, holding the firm accountable. Of course, we've talked a lot with the CFO on this program. Every earnings season, we ask about this asset cap. This has been a huge constraint on the company's ability to grow. And of course, that means a constraint on the shares. That constraint, at least for right now, has been lifted.
Yeah, and you can see it with investors, right? Moving into it in a big way in the aftermarket. Right now, up about roughly 4% here, Katie.
Yeah, we'll continue to follow that story. Of course, like you said, Wells Fargo shares popping after market. But let's take a look at what did well today, because there's a lot to talk about here. If you take a look at the sector level, broadly an update. Breadth was pretty good relative to yesterday, and you can see that it was tech that was in the lead here when it comes to what was gaining, what was losing when it comes to sectors. You also had energy higher as well. If you take a look at what didn't do too well, you could find something to peck at when it comes to communication services. That sector falling about 0.8%. Real estate, consumer staples also taking a little bit of a dive, but 8 out of 11 sectors in the green, Carol.
All right, guys, let's get to some of the individual gainers. As you said, Katie, a lot of winners in today's session. Hey, a lot of names in the nuclear energy space definitely gaining in today's session. Not everybody, though. If you take a look at Constellation Energy, we did see initially a pop, but it lost a lot of that, and I think all of it by the end of the close. Vistra, though, did hold on to most of its gain, up about 5%. That's a $59 billion power generation company that's up about 30% year to date. But again, the big reason we've been talking about this sector today has to do with Constellation Energy agreeing to sell a bunch of power from one of its operating nuclear power plants in Illinois to Meta Platforms. So again, we're thinking about AI demand, we're thinking about how we power it, and nuclear tends to increasingly be the way forward. I mentioned semiconductors. I think all 30 names in the stocks were up today, and that includes Broadcom, up about 2.9% here at the close. The company began shipping a new version of its data center center switch chips that can boost the efficiency of AI accelerators, aiming to take a bigger role in the booming market for AI computing. So, yeah, all eyes on Broadcom. Keep in mind that it does report after market close. That happens on June 5th, so a little bit later this week. Dollar General, I think this is the number one gainer. Yep. In the S&P 500, finishing the day up more than 16%, its highest intraday ever as well. I should point out, we talked about this earlier, the company reported first quarter profit and sales that topped expectations, and management also boosted its comparable sales forecast for the full year, as well as the low end of its EPS target. And Tim, of course, gave some more color into Dollar General about kind of richer consumers, wealthier consumers, maybe trading down in this environment. So we wonder what that all means.
Have you ever been in a Dollar General, Carol?
I've been in some kind of dollar store at some point.
Right.
What are you saying?
Nothing.
Have you ever been in?
Of course not. You know I'm a snob.
I know.
Wow.
No, I can shop just about everywhere.
I'm gonna move on. I'm gonna move you guys on. How's that? I want to start with Kenvue. It was the worst performer in the S&P 500 on a percentage basis, down 6.2% today, falling the most intraday in more than a year. It comes after the company's CEO warned that seasonal demand is behind last year and behind Kenvue's own expectations. Here's what he said, quote, "It's not a great year so far for allergy, and the sun category is more or less the same." He said a longer winter season pushed spring later into the second quarter. It caused allergy products to see a later start to the season. He also said we definitely see that the consumer continues to be under pressure regardless of the geography for slightly different reasons.
Got to interrupt you, Tim. Sorry. Hewlett-Packard Enterprise is reporting earnings right now for their fiscal second quarter. The company says revenue coming in at about $7.63 billion. The street was looking for $7.46, so that is a beat on the top line. On the bottom line, adjusted EPS at 38 cents a share. The street was looking for 33 cents. That's also a beat. Here's your guidance. I'm going to start with the quarter. For the quarter, the third quarter, which is the quarter we're in right now, $8.2 to $8.5 billion is the range they're giving. The low end of that range is above the average of street estimates. On the bottom line for the quarter, 40 cents to 45 cents. The street on average was looking for 42 cents. And the company says that for the full year, it still sees free cash flow of about $1 billion. The street looking for $1.4 billion. So it looks like a beat on the top and the bottom line, and the guidance on both the top and the bottom line, just around what the street was looking for.
All right, guys, let's get to CrowdStrike. Man, this stock has been on a tear this year, up about 40% or so. The company out in terms of first quarter revenue matching estimates, but let's get to actually the outlook, because the company sees second quarter adjusted EPS from 82 to 84 cents a share. Street estimate is 82 cents a share. Also sees fiscal year adjusted EPS of $3.44 to $3.56 a share. Looks like it's upping it that estimate because it had seen $3.33 to $3.45. I'm looking at CrowdStrike, though down about 6% here in the aftermarket. So it looks like some investor disappointment. I'm just looking through first quarter revenue. That was $1.1 billion, the estimate. That was smack in line in terms of what the street was expecting. And first quarter adjusted EPS 73, and that was a beat of about 7 cents a share. So maybe some concern potentially about the outlook in the range, but we'll see.
I'm looking at shares of the enterprise software company Asana. They're shooting higher in the after hours, down from about 20% higher moments ago, up about 14% in the aftermarket. The company posted first quarter revenue that came in above the average analyst estimates at $187.3 million. First quarter adjusted at basic EPS coming in at 5 cents versus a loss per share of 6 cents. So obviously investors like to see that. Shares jumping in the after hours right now, higher by about 14%.
I want to go back to CrowdStrike because you're seeing losses deepen in the post-market right now. CrowdStrike shares currently down almost 6% right now. And Carol, you had mentioned it that this stock has been on a tear. Expectations were certainly high with the stock up 43% year to date. But it's that outlook that didn't quite exceed expectations. Second quarter adjusted EPS, just to reiterate, seen at 82 cents to 84 cents. The estimate had been for 82 cents. So you think with the stakes that high, maybe a little bit of disappointment, and that's certainly what you're seeing in the shares right now, Carol.
Right. You also do have CrowdStrike reporting a share buyback authorization of up to $1 billion, but that's not certainly getting investors excited. Again, the stock down 6.3% in the aftermarket. All right, folks, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals, Katie and Romaine continuing on TV. Tim and I are going to hit the road, so you guys are going to have surprise anchors tomorrow. Anyway, we will see you soon. All right. That's a wrap. We'll see you again, same time, same place tomorrow.